It's great to have your company for the weekly this Friday, the 9th of July. I'm Jessica Amir, Senior Market Analyst with Bell Direct. Well, investors have been moving like the wind, buying stocks that will likely benefit from increased travel and vaccination rates in Australia. And didn't we see that this week? Industrials in a league of their own, flying up 4.5%, outperforming the ASX 200's gain of 0.5% Monday to Thursday. Two main drivers really added fuel to the travel sector this week. Firstly, Sydney Airport received a $22 billion takeover offer from a group of fund managers, including IFM, Q Super, and they're collectively valuing SYD shares at $8.25 per share. That's pretty close to pre-COVID highs. So this was a huge vote of confidence in SYD's long-term value. So investors quickly raced to buy SYD shares, and that sent their shares up 34%. But now, for investors, they'll be watching two things. If SYD shares can rally again, why? Well, there's now talk of a second bid. Macquarie may put in a rival bid. If this happens, and if the bid is higher than the current offer, SYD shares will probably rise up again. On the flip side, if there are no further bids, SYD shares will likely see some profit taking. Now, the second reason travel stocks took off on the runway this week, NZ opened their travel bubble to South Australia, the ACT, Tassie and Victoria, and that supports cash flow and earnings in other airports too, like Auckland International Airport, AIA, which rose 6% this week. Now, moving to next week and beyond, if you're a long-term investor and looking for opportunity, you simply can't ignore unloved travel and tourism stocks. Why? Well, from July 19, Australia is set to get triple its weekly Pfizer supply, with 1 million doses per week for about 2 months. Now, that'll really help scale up the nation's rollout, which is lagging the rest of the world. So if we think about what's happening overseas, as a base case, we know in Europe, they've opened quarantine-free travel in the EU to people who are fully vaccinated against COVID-19. And in the US, you can travel there domestically if you're fully vaccinated. So this supports earnings and cash flow growth for a lot of the businesses in the services sector. Now, as a result, research house FactSet thinks that the US and Europe will see the most broker upgrades in the world to their company earnings per share in the year ahead. At a sector and stock level though, industrials, as in airlines and travel stocks, are tipped to see the second strongest earnings per share revisions or upgrades. Now, what do earnings upgrades by analysts do to share prices? Well, simply, earnings upgrades by brokers and investment houses imply higher earnings are ahead, and that supports share price growth. If you looked at the numbers since 1987, global markets have rallied consistently after earnings per share forecasts were increased. In other words, you want to be invested in stocks when analysts are upgrading earnings forecasts. So what's the takeaway for you as an ASX investor? Well, broadly, analysts have increased Australia's 2021 earnings per share forecast by around 20%. Now, this supports share price growth in the year ahead. But using those base cases we went through earlier, if Australia follows the US and Europe and eases national restrictions once people are vaccinated, you'd expect Australian industrials and the ASX travel sector to see strong broker upgrades too. So what are some investment strategy ideas now? Well, taking a long-term view, you might like to increase your exposure to travel and tourism stocks, perhaps like Webjet, WEB, Flight Centre, FLT, Hello World, HLO, Qantas, QAN, Rex, REX, and Corporate Travel Management, CTD. And even those across the ditch like Air New Zealand, AIZ, and Auckland Airport, AIA, they could do well too. Now, here are two potential top stock picks in travel. Keeping in mind, you may want to favour companies that have strong balance sheets or companies who have heavily cut costs during the pandemic. Qantas, QAN and Flight Centre, for example. Firstly, Qantas, they're rated as a buy for Bell Potter, Citi, Morgan Stanley and UBS. And Macquarie has got a 12-month price target the most bullish at $7, but I might add that price targets start as little as $5.70. Now, the investment bank Morgan Stanley thinks that Qantas's capacity will be 18% of FY19 this year. Capacity will be 55% next year and 82% the year after. And the investment house also expects travel to be back to normal in 2024. But what's really interesting is, irrespective of the international travel recovery, Morgan Stanley expects Qantas to be cash flow positive. Now, that's probably for two reasons. Firstly, Qantas is the preferred airline in returning international Aussies back home. And secondly, Qantas has got a highly profitable loyalty or frequent flyer program in place. Secondly, what about Flight Centre FLT? Well, it's a buy for Bell Potter and Macquarie. Macquarie has got a $17.50 target for 1 year from now. Now, if you're looking at charts and into using technical indicators to back your decision making, you would have noticed FLT shares recently saw increased buying from late June. So this saw FLT shares enter what's called a technical uptrend on a daily and weekly basis, and this suggests FLT could move up. Plus, another technical indicator looked at by some investment managers is the moving average convergence divergence, or the MACD. Now, this is a subchart down the bottom. Now, the MACD chart simply tells us FLT could rally, as technical traders are likely to buy FLT, as both the two squiggly lines down the bottom look like they're about to cross above the signal line. Now, when this occurred in the past, FLT shares rallied. So if you're a Bell Direct client and you'd like to try this charting indicator with stocks that you hold or even stocks that you're interested in, just go to charts, then click on indicator and then search MACD. And that's the weekly with plenty of considerations for your portfolio. If you've got any questions, leave them in the comments section on YouTube. From all of us here at Bell Direct, have a very happy and safe weekend. I'm Jessica Amir. Bye for now.